You're welcome back. If you just joined us, you're watching Business Incorporated. We're live to you from Channels Television. Now, last week, the Nigerian Sovereign Investment Authority signed a total of $700 million agreement with Old Mutual Investment Group of South Africa and UFF Agri for the establishment of real estate and agriculture co-investment vehicles. The agreement is expected to result in massive direct investments expected in both sectors of the economy. Now, how is this initiative expected to improve foreign investments in Nigeria at the moment? Pabina Yinkere is the head of research at Vetiva Capital and now joins me to talk about this issue. Pabina, good afternoon and welcome to the program.
Good afternoon, Bolaji. Thanks for having me.
Now, this deal is coming on the day of the Minister for Finance, Mrs. Kemi Adeosun, disclosed that the federal government had commenced discussions on the privatization of the country's railway system to provide a necessary infrastructure for agriculture to thrive. What does this hold for the Nigerian economy?
It's a very good and welcome development, I would say, particularly at this point in time when the Nigerian economy is at a very bad situation. And of course, the death of foreign investment that has come into this country in the last couple of days, we think this is a very good development. What is particularly interesting for us is that a part of the fund would focus on the agriculture sector, which we think it's a low-hanging fruit in trying to diversify the federal government revenue. If you recall, Nigeria's food import bill is a significant amount. As our last estimate, it was estimated about $5 billion. So we think if further investment goes into the agriculture space, it can provide an avenue for Nigeria to begin to come out of the economic malaise that we're currently in.
Now, the fund's proportion to real estate seems to be more than that of agriculture. What does this say about the interests of both parties?
If you look at Nigeria's housing deficit, you would see that that figure is quoted around 17 million per annum, 17 million units of houses per annum. So when you look at the situation, it becomes very, very important that a lot of funds are channeled into the real estate sector. But for me, yes, even though more funds are being directed or channeled into the real estate, for me, I think the most interesting part is the agriculture part, because I think that holds very, very, very good near-term potentials. For real estate, the fund is basically going to focus on residential as well as commercial buildings. Nigeria's real estate market at the moment seem to be somewhat in need of these two types of investments. So overall, we think it's a good development for Nigeria, and we hope that this will just be the beginning of the kind of FDI attraction Nigeria would need going forward.
Now, talking about attracting more FDIs, now, do you think this step will serve as a springboard for other investors who perhaps have been staying on the sidelines, watching and waiting for their own right time to invest in the country?
Different investors seem to have different risk measure of any investment, and with Nigeria, the case is so. I think what many investors will be looking at would be, when is the right time for me to come in? I think that will be the question on many people's minds. And depending on the sector you're going into, it determines when one should come out. But many of the investors we speak to in our daily business seem to think that yes, Nigeria holds a lot of opportunities at the moment, but then they need to see a couple of things happen in the economy. One, they need to see that the government is putting in place policies that can help Nigeria come out of the current economic downturn we're in, and they need to see consistency in policy formulation. Those are two key ingredients missing for many investors. The fact that Nigeria is currently headed towards a contraction and possibly in negative GDP growth in the second quarter does not really deter many people. If anything, the point of downturn is where you want to come in with investments, because your upside only just improves at that time. So I think different investors would measure it based on different criteria and how they assess the Nigeria risk as a whole.
Fabina Yunkiri, Head of Research, Vetiver Capital Management, thank you so much for your time. And Ghana's president promises to overcome economic problems at the launch of the elections campaign ahead of the general elections to hold later this year. President Mahama says that although the economy is reeling under the weight of fiscal imbalance owing to slump in commodities prices globally, it has better plans for Ghanaians.
Ghana's President John Mahama told supporters the country was overcoming its economic problems and promised to return to prosperity as he launched his campaign on Sunday, August the 14th, ahead of what is expected to be a close-run election. Ghana was one of Africa's fastest-growing economies at the beginning of the decade, thanks to exports of gold, cocoa and oil. But growth has tumbled since 2014 due to a slump in commodity prices, leading to a fiscal crisis and unpopular austerity measures. The economic problems have weakened the standing of Mahama, who will seek a second term in a presidential election on December the 7th, when he will run against Nana Akufo-Addo, leader of the opposition New Patriotic Party. On his first official day of campaigning in the seaside town of Cape Coast, Mahama, who has been in power since January 2013, said the economy was turning the corner.
Our focus in the last 4 years has been on three main issues. One, to resolve the power crisis. Two, to stabilize the economy. And three, to improve our socio-economic infrastructure. With your understanding and cooperation, we have put the worst of the power crisis behind us. The fast-track addition of almost 1,000 megawatts of power to our generation has enabled us to balance supply against demand.
Continuing a theme of his pre-campaign speeches, Mahama highlighted investments in education, transport, electricity and healthcare as a sign of improvements to come. He signed a 3-year $918 million aid program with the International Monetary Fund in April 2015 to tackle high public debt, steep inflation and power outages, but economic problems persist.
Okay, we will go on a break, and when we come back, we'll be taking you to the markets. We'll be right back.